Hi, welcome to the Market Alert for Wednesday, 30th of May 2018. I'm going to kick off with what's behind the market moves today first. Soros here, lovely man, and as you'll guess from the tone, can't stand him. And here's what he's got to say. He contradicts himself as well, which I'll show you in just a moment. Everything has gone wrong. Soros warns major financial crisis is coming. Well, I'm going to put my cards on the table here. I voted to leave in the referendum, the Brexit vote, purely and simply, nothing political, but to do with the fact that Europe was going to implode financially because of the debt. Italy will be the catalyst behind it, and now it's starting to come to fruition. And a lot of friends, was mocked for it and everything else. And I said, we've got enough financial problems in this country ourselves without having to fund and bail out everybody else. And that was the reason behind why I took that decision. I couldn't care less about the political side of it. It's people like Soros Bilderberg members who want to keep this thing together. So here he is saying in this part here, it is no longer a figure of speech to say that Europe is in existential danger. It is the harsh reality. We may be heading for another major financial crisis. They know they are. The debt's sitting at over 9 trillion. Draghi was printing 60 billion a month. I think he's cut it down to 30 billion a month to keep companies going. And then, lo and behold, Council on Foreign Relations Soros here saying that he was speaking to an audience on Tuesday and said that Brexit was an example of territorial disintegration. So on the one hand, he's saying that it's heading for a major financial crisis. The next minute, he wants to actually set up a party to re-vote for to stay in Europe. I mean, the man should be in a nursing home, frankly, with these sorts of comments. He's a nasty piece of work, and he doesn't like the thought of the whole of the cabal, the elite, falling apart. And this is why they're doing their best to keep Italy going. And as you'll see here, we've got Italy headed for July elections as Mr. Scissors. Mr. Scissors is Carlo Cattarelli, or Cattarelli, and he's a former IMF official, so no doubt Goldman Sachs in some description as well. He's been brought in because they couldn't, the Italians couldn't form a government after the populists won, and now they're going to head back to elections in July. I'll be surprised about that, actually. They're either going to get it out of the way before August, because the Italians have the whole of August off, so it's either going to be July or September. I wouldn't be surprised if they don't leave it until September. So that's in the background, and of course all of this uncertainty is creating massive spikes in the yields. They've already got banking problems on a level that's unparalleled, and also the Spanish as well. They're seeing their yields increase. We've got bank crash 11% in the last 4 days. US banks also got problems. VIX is back above the 200-day moving average, and dollar spiked to a 6-month high as well. No surprise there. So when you start to see the pieces in the jigsaw starting to come together, and you see these yields starting to spike like this, we know there's some major problem, and that's why they've put a former IMF chap in Italy at the moment to try and hold it all together. So that's what's going on. So it's going to be a very interesting summer, and certainly if they do manage to get a snap election between now and August, and I think that they'll probably get even more votes from what's happening here, just to force their hand, because they're trying to keep the likes of the populist vote out of it, because they know once the people get a vote and sway it like they did with Brexit in America and other parts of the world where there's an uprising, people sick to the back teeth of these elite people and leaders, then you're going to see more of this happening. And I wouldn't be at all surprised to see that the vote's probably twice as much as it was before. And like I say, it's a financial catastrophe waiting. It always was. I was never a fan from the start. Wasn't even a fan from when they had the ERM way back. I was still trading when we had the ERM and said it wouldn't work. And Soros is the man who crashed our pound. And Black Monday went all the way down, cost every taxpayer, I think it was £90 in those days. And the Bank of England did absolutely nothing about it. They couldn't do anything about it. So they said. And here you are with people like that involved up to their necks in the politics of everything. It's just, it never ceases to amaze me how gullible people are and allow these morons to have this power. It really doesn't. But anyway, that's the reason behind what's going on in the markets at the moment. And in the pound yesterday, obviously this is the uncertainty in Italy is weighed heavily in the European arena. We started out at the DP level, the market closed below this and the 20-bar average, and then just sailed all the way down through all of the pivot points through the S3. We then see some testing coming into the market down at the 132 level. I think this is 132 down here. Let me just check this. Yep. So the market test just by the 132. This is profit taking from this down move. If you're short futures contracts, you have to buy them to get out of the position, and that's what you see here. And that's why it starts to drop off a bit when it gets to this level, and then the market pulls back before it has another bit of a punt, and you'll see the exit of a few more contracts in this area, and then the market's just traded sideways there. But in the daily charts, we certainly have a downtrend in place. I'm just going to adjust this trend line because the market didn't move higher. We'll just take there, see what happens. So we've certainly got the downtrend firmly in place there. We're below the 50 bar, we're below the 20, and the black line there is the 200 as well. So we're way below that, down at 133. Straight through yesterday. I'm finding a bit of support today. In the bigger time frames, also, this is the weekly chart of the pound. I do like longer time frames. You'll see the market hit the 200 bar average here, and then it's continued through the 20, through the 50, and now sideways. So let's just have a look and see where there's any support longer term through there. So we've got certainly some support here. If we were looking for a bit longer term, 130, that would make sense. That's a psychological number as well, round number. So we'll save that one in there. And just before we do that, let's just see if we've got from this low to this high. No, we're already through it. I thought we would be. So no 76% area in between there. And then in the Dow, the market also moving low. Now this moved lower on the overnight. I'm just going to drag this chart over and show you something here with regards to the pivot points. You can see that we were already through the low of the Friday, Monday the markets were closed, and then straight through in the pre-market session. And once you've broken these levels, there is a major acceleration to the downside, which we see. Again, the market coming back through the 50 bar, 20 bar average here through the S3. They tried to buy the market from the open. The market just trading back up towards the S2, which is just there. And then once it closed back below the psychological level here, which is 24,600, the market had to give way, and down she came. So you'll see that there. Also, note this as well. You've got the market coming down from there to there. Oh, I always do this, don't I? Let's just forget this when you're not doing it in real time. The market comes back up to 76%, goes through it there, but closes on it here. See, they're closing on it, and then once it closes below, it's just a matter of time before we get through the S3 as the market bounces around there, eventually closes below both the averages, and then it's plain sailing all the way down because of what's going on in Italy. And the market remained that way, it stayed that way, apart from, again, the shorts coming out. If you're short, you're going to buy. If you have to buy, the market will bounce. Low volume, the profit taking's over, the market resumes to the downside, which is what you see going on there. And then finally, in the crypto world, let's just adjust this. We can see that the downtrend is still intact here at the moment. However, prices are starting to find some support, and cryptos are, whether you like it or not, are going to be seen as a bit of a safe haven outside of the financial system, especially if Europe starts to fall apart during the main part of the summer as well. So, you know, whether we like it or not, these are here to stay, and they're currently finding a bit of support. And this is how it happened yesterday. This is the 30-minute chart. Again, the market was sideways following Monday's trading session overnight, and fascinating here because the market's coming off the low pivot, and then you've got the psychological level here as well, which is 7,100, this red line. And you'll see, if you look at the detail in these things, how the market kept coming back above this area. It tried to move higher here, was sold into, because you can see how the market came off the high at 7,150, and then back to the previous day's close, how it sits on this level, back above the 20-bar average. That's above the bar, the average, that's above the average. They then attempt to move the market higher here, and they run into resistance. I'm just going to clear the decks a minute. This bar here, and runs into resistance here. And just to show you that, you'll see there. So the market then had to drive through this. Got the signals. The market drove through, and it went straight through. It went straight through the 50 bar, the 200 bar, through the DP, and straight to the close, which you'll see there. You got the close pivot point there, and then eventually the market spiking up just a bit more on the evening session there, straight up to the R2, or heading to that way. So you've got 7,550 blue line there, minor psychological level, and the market then comes back $100 and has been sitting in that range ever since. And that's the same with all markets, irrespective of what they are. So when you combine the averages with the pivot points, with the psychological levels and the trading edge bars, you can see exactly where you're going to need some serious volume to drive prices higher, because we've got areas here, also psychological area, because the market had held in this area. And then you see the market having to contend to turn the market back to the long side. It's got to drive through the daily pivot from the previous day. You've also got the average in the way, and you've got the previous day's high, which is always going to be a natural resistance area, and the market trades straight to it with massive volume. So just to switch the market, you then get the potential weakness and profit taking at this level, because that's what pros do. Thank you very much. Objective achieved, take the money. Nobody comes in to sell the market back to the downside, and then later on there's the other opportunity just to move it back up $100 there. But like I say, it doesn't matter whether this is the Dow, the pound, the euro, makes no odds. Once you understand all of these principles, then you can read what's actually going on in the markets. Right, that will do it for today. Actually, I've just had a thought. Better just go back to one of these others and have a look, see if there's any central bankers out today trying to calm the markets. We've got nothing really, only the ADP non-farm. Perhaps it must be the non-farm figures this week. We'll soon see as we head further into the week on Friday. And we got the prelim GDP from the US as well at 1:30. But other than that, not a lot going on as we head further into the summer. But then again, it was the summer of 2008 when we had major problems too in the financial markets, and also in 2011, if I recall, 2010, 2011. I think it was 2 consecutive years actually, and both of those were in May, and also again Greece and Italy. Right, that's it for this one. If there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.